So hello guys, in my last video we have discussed about the concepts of trial balance, and now we should be moving on to balance sheet. But before discussing the balance sheet, what I feel is that there are a couple of concepts that we need to keep in mind. So it will take around a couple of videos to explain these concepts, and then we would be moving on to balance sheet, a cash flow statement and other financial statements. So without wasting any further time, let's just start the today's video. So in this video we will be discussing about the different types of costs that a business incurs, and firstly are the costs based on behavior. So number one are fixed cost. So fixed cost refers to those types of costs that a business incurs every period. For example, a rent that a company has to pay or the salaries that the company needs to pay. These are termed as fixed costs because a company pays rent every month, and the same goes out for salaries as well. Number two, we move on to the variable cost. So variable cost refers to those types of costs that are not fixed and it changes with change in level of production. For example, if a company decides to increase their production, that means that company needs to purchase more of the raw materials. So as the cost in order to purchase the raw materials increases because the company is purchasing more of it. So that is why it is termed as variable cost. Number three, we move on to the total cost. So total cost refers to those types of cost which are combination of both fixed and variable cost. For example, electricity bills. Just because electricity bills has a certain fixed component and certain variable component as well that needs to be paid with the utilization of every unit. So now moving on to the cost based on function. So number one are direct cost. So direct costs refer to those types of costs that are traceable with a specific product or a department. For example, the wages that has been paid to factory workers. Just because factory workers are an essential part of a production process for a specific commodity or a product. So that is why the wages that has been paid to them are an example of direct cost. And number two is indirect cost. So indirect costs refer to those types of costs that are not directly traceable with any kind of product. For example, advertisement expenses. Just because advertisement expenses are an additional expense that business incurs in order to promote itself. Just because we can also produce the product and sell it without even advertising as well. So that is why advertisement expenses are an indirect cost. So now let's move on to the cost on the basis of decision. And number one are opportunity cost. So opportunity cost refers to those types of cost in which the next best alternative is foregone when the decision is made. For example, a company has a factory and there are two types of product A and product B. So out of both of the product, the company has the space to accommodate only one of the products. So that is why one product will be selected and one product has to be rejected by the company. So the product that will be rejected is an opportunity cost for the company. And number two, we move on to the sunk cost. So sunk cost refers to those types of costs that are already incurred and cannot be recovered. For example, research cost. And number three are marginal cost. So marginal cost refers to the additional cost that a company incurs in order to produce one more extra unit. For example, a company produces 100 unit, but then it decides to produce one more extra unit. Then the cost to produce one more extra unit is known as marginal cost. And number four are replacement cost. So replacement cost refers to those types of cost in which the product is replaced at the current market price. So lastly, moving on to the cost based on production. And number one are prime cost. So prime cost refer to the core cost of producing a product. There is a formula for prime cost which is direct material cost plus direct labor cost. If the direct material cost is 50 and if the direct labor cost is 50 as well, so the prime cost is 100. And number two are conversion cost. So the cost of converting one raw materials into finished product is known as conversion cost. So there is a formula for conversion cost as well, which is direct labor cost plus manufacturing overhead. If the direct labor cost is 50 and manufacturing overhead is 20, that means that total conversion cost is 70. So that's all with the today's video, guys. And if you want to learn more about finance basics, then you can check out my previous videos. I put the link down below in the description. Till then, see ya, stay tuned.